Good morning, this is Bloomberg Daybreak Europe. I'm Tom Mackenzie in London. These are the stories that set your agenda. With the world's central banks in focus this week, Asian stocks gain on positive data from China's consumers. But in the US, futures slide as the Treasury Secretary says the stock market correction is healthy. The US president, meanwhile, confirms he will speak with Russia's Vladimir Putin tomorrow, with the talks on ending the war focusing on how to split disputed territory. Plus, the US promises unrelenting strikes on the Houthis in Yemen. The group says it will continue attacks in the Red Sea until aid is allowed into Gaza. Good morning, happy Monday. So on Friday, US markets ended on the front foot, but after 4 straight weeks of losses, the Treasury Secretary then, Scott Bessent, coming out saying this market correction is, quote, healthy. Trump, in the last couple of hours, President Trump suggesting that April 2nd is still very much in focus in terms of when those reciprocal tariffs and sectoral tariffs kick in. So some potential headwinds to think about again on the tariff front as we look to the open this Monday. European futures pointed to very modest gains of 0.1%, pairing some of the earlier upside that had been flagged for the session this Monday. FTSE 100 futures currently pointed to gains of 0.2%. S&P futures pointing lower by 0.5 and a loss of 0.6% being flagged for the Nasdaq 100 futures, again, after a very strong Friday, but in the context of 4 straight weeks of losses. Let's flip the board and have a look cross-asset. We do have the Bank of Japan, the Bank of England, and, of course, the Fed decision. That Fed decision and Jay Powell's comments, of course, coming on Wednesday. Scrutiny, no doubt, on where the balance is now amongst and between jobs for the Fed and inflation. The benchmark 10-year currently yielding 4.30. Euro-dollar remains at the 108 level. Brent at $71 a barrel, up 0.7%, despite the fact that Goldman Sachs have come out and cut their forecast for Brent to 71 by the end of this year on oversupply concerns. And gold just below that 3,000 level that it broke through on Friday, of course, but still close to those record highs, gaining 0.1% in the session today and just within, of course, the margin when it comes to that $3,000 level. Now, let's cross over to Asia. Standing by for us, Avril Hong in Singapore, with a top-line picture looking bright. The focus again on China, data and a press conference from officials in Beijing. Avril.
Yeah, we're seeing Asia stocks running higher with the optimism. What might the consumption briefing bring? But don't forget, when you look at the data, we got a beat in terms of retail sales, but look at the jobless rate as well. It did jump to the highest in 2 years. So clearly, this is an economy that is in need of stimulus. For now, Chinese tech stocks are hovering flat. The next driver, apart from the consumption briefing, might also include later this week some of these earnings scorecards from big names, including Tencent, Meituan, Xiaomi. Now flip the board, it is BOJ week, as you said, and looking at dollar yen, the moves today above 149 at one point were to do with Trump's threats on reciprocal tariffs potentially involving auto levies. But keep in mind as well that domestically, Prime Minister Ishiba is kind of, seeing his support dwindling, given what's emerged about shopping vouchers that he's handed to lawmakers. So does this sort of affect the negotiation position of Japan? Now flip the board again, just quickly taking a look at Chinese stocks, because we're actually seeing the MSCI China, its outperformance versus the S&P 500 at the biggest since the year 2007. And I talked about the driver for stocks potentially being tech earnings, but another one could be this view that's been emerging of a so-called C put. Franklin Templeton thinks that the Chinese president could take this opportunity as U.S. stocks languish to push through more market-friendly measures, all as part of efforts to meet that 5% growth target for the year. Tom.
Yeah, what a rewriting of the narrative. No Fed put, no Trump put, but potentially a she put. That the view, as you say, from Templeton. Avril Hong in Singapore, thank you very much. Let's get more on the details in terms of the data that's crossed out of China this morning, leading up to that press conference. The latest China activity data shows consumption grew faster at the start of the year, helping offset the impact of US tariffs. It comes as Beijing vows to take more steps to boost demand. Bloomberg's China correspondent Min Min Lo joins us now with the details. Min Min, break down the numbers for us. What stood out to you?
Yes, we got a pretty robust set of numbers to start off the year, a big beat on most of these metrics. You look at fixed asset investment coming in at 4.1% versus estimates of 3.2%. That suggests we still see this government-led expenditure that is driving growth. But the big standout to me is industrial production coming in at 5.9% versus estimates of 5.3%, certainly doing better than the export numbers in the first 2 months of the year, which largely undershot expectations, suggesting that this industrial activity is still remaining quite resilient despite some of the tariff risks that are in place. Retail sales coming in at 4%. I think that's what investors are most concerned about this year, beating estimates of 3.8%, and that will help offset that tariff risk, as you said. But you look at the last two indicators on that chart there. Property investment still down about 10%. Surveyed jobless rate 5.4%, the highest since February of 2023. And I think longer term, we still need to see improvements in those the last two indicators there, because that reflects people's confidence around their future income. Property is how they accumulate wealth as well. So you need those two to improve in order to see this restoration of confidence when it comes to people's willingness to spend. But overall, still a sort of Goldilocks scenario here, because the data is not too weak that investors will be very worried about the immediate trajectory of the economy, but not too strong as to not warrant more stimulus from the government.
Yeah, that need for stimulus is still there, and you zoom in, of course, on the real estate story, and prices falling once again, and you tie that, of course, to the health of the consumer in China, and that links us to what's been happening in terms of the press conference later from Beijing. What are you going to be looking for, Min, from that press in terms of how officials plan to support the consumer, particularly at a time when real estate seems to be continuing to be challenged, and we know that is such an important asset for Chinese consumers?
Yeah, you look at the representatives who will be present at that press conference later. They are all at the vice ministerial level, and that provides the first hint that it's not likely to be any sort of very big market-moving news. We already have the action plan unveiled by the State Council over the weekend, their action plan to boost domestic consumption, including quite a wide-ranging number of measures, including plans to boost this sustainable or reasonable growth in people's income, and a mechanism to adjust that minimum wage. Also plans to support investments that would in turn support consumption. For example, extending visa-free policies to certain countries to attract inbound consumption, creating these sort of ice and snow tourism festivals. Also measures related to people's livelihoods and social welfare. For example, more incentives, subsidies for childcare, and also raising the pension. So later this afternoon, 3 p.m., that's when we have the Ministry of Finance, Ministry of Commerce, as well as the NDRC, the top economic planner, and the central bank coming together to hold this press conference, which suggests that it is going to be a whole of government approach, a much more holistic approach to boost consumption, something that goes beyond just upgrading of household appliances. And I think that is a signal of the government's intention here, and that's what is driving more investors' conviction about how China could potentially be that stabilizer amid this uncertainty and unpredictability from Trump.
OK, Bloomberg's China correspondent Min Low, thank you very much indeed. Breaking down the data out of China, of course, looking ahead to that press conference and additional measures that could come through to support the Chinese consumer. We'll be across that for you, of course, and break any lines. Now, US futures have started the week on the back foot with comments by US Treasury Secretary Scott Bessent taking a chunk out of the risk appetite. He told NBC that market corrections are healthy and normal.
I'm not worried about the markets. Over the long term, if we put good tax policy in place, deregulation, and energy security, the markets will do great.
OK, for more on the market reaction to what we've been hearing from the Treasury Secretary, let's bring in Bloomberg's Valerie Teitel. Valerie, at the time, of course, when Trump is reiterating his plans for reciprocal and sectoral tariffs on April the 2nd, talk us through the reaction to Scott Bessent, former hedge fund manager, of course, being relatively relaxed, again, suggesting that the guardrails around the S&P and the US markets are not necessarily there for this Trump administration.
Yeah, that's right, Tom. Calling the correction healthy. This has really had the equity market, at least for US futures, start the week on a back foot. Let's hope he doesn't say anything talking about calling bear markets healthy going ahead. But what is ahead for the equity market? Many people scratching their head. What's going to be the catalyst this week? Is it going to be more updates on tariffs, possible peace negotiations with Russia, or could it be the slew of central bank meetings that we have this week? The big one being the Federal Reserve. Their decision comes on Wednesday night. They will be releasing alongside their decision their updated dot plot and their updated economic projections when it comes to growth and inflation. That is going to be the key focus to the market. Do they perhaps signal that there's less cuts ahead in 2025? Their previous dot plot in December had 2 cuts penciled in. The market is in between 2 and 3, so we're slightly dovish than the previous update from the Federal Reserve. There will also be an update on any announcement on quantitative tightening when it comes to their balance sheet runoff plan. There were hints of this in their previous minutes, Tom. They discussed a possible pause to QT. Do they go ahead and announce it at this meeting? That'll be another thing that'll be under markets focus. But there is a slew of central banks meeting. We have many across the globe, including some emerging market economies, even South Africa and Brazil. The big two in my mind are the Federal Reserve and the Bank of England. Both of those will have a updated economic projections and press conference after their rate decision.
OK, Bloomberg's Valerie Total. Excellent breakdown and setup for the rest of the week. Big week, of course, around the central banks, as Val was saying. Now to geopolitics and the latest on Russia, Ukraine. President Donald Trump says he will speak with Russian President Vladimir Putin tomorrow. That's as the US, of course, continues to push for an end to fighting in Russia's 3-year war in Ukraine.
I'll be speaking to President Putin on Tuesday. And a lot of work's been done over the weekend. We want to see if we can bring that war to an end. Maybe we can, maybe we can't, but I think we have a very good chance.
Well, the planned conversation comes after a meeting between US Special Envoy Steve Witkoff and Putin in Moscow last week. Let's bring in Bloomberg's Oliver Crook for the latest. Ollie, what can we expect then from the Trump-Putin discussion? We now know, according to President Trump, that this will be happening on Tuesday.
So basically, the next step in what could be the beginning of the end of this war is what we're anticipating here in that conversation with Donald Trump and Vladimir Putin. I suppose we could take it as an encouraging sign that after those meetings between Steve Witkoff and Vladimir Putin, we understand that they spoke for about 3 or 4 hours last week about a various number of issues, that plan is actually moving forward. We did hear from Steve Witkoff over the weekend, kind of debriefing the press a little bit about the discussions with Vladimir Putin. We should say that despite the fact that there was optimism in sort of his what he was saying about how the conversations were moving, there weren't a lot of sort of concrete steps in terms of where we are in terms of these discussions. We know that they talked about territory. We know we talked about assets on the ground. For example, the nuclear power plant in Zaporizhia was another part. So we know they're getting into sort of the nitty-gritty and the detail. But again, we don't really know where we are on these discussions in terms of the concrete steps. We heard something very similar from Marco Rubio, the U.S. Secretary of State, who was also speaking to the press over the weekend. We do also not know 100% if the Russians are on board with the American concept. The American concept is part 1, ceasefire, part 2, lasting peace deal. These are things that we have not fully fleshed out. We should say, however, that kind of if we take a step back and look at the architecture of this, what Trump wants is a deal fast. What Putin has wanted is a deal very slowly. Time has been on sort of Putin's side for a very long time. Could that come to a head? The other indicator we got at the end of last week, Tom, which we shouldn't sort of sweep under the rug, is we did have that joint statement from the G7, which is a less and less sort of guaranteed thing with the United States being more and more of an outlier, saying that basically if Russia does not come to the negotiating table, they are looking at additional sanctions. They are looking at potentially lowering the oil price cap. They are looking at potentially more support for Ukraine. So we'll have to see where the discussion goes with President Trump and President Putin a little bit earlier in the week. And the real question, I think, is for everyone observing this is how much daylight is there between the two concepts of how to end this war, the United States and the Russians, and we still do not have the answer to that question.
Yeah, and your point on time framing and the urgency being pushed by the Trump administration versus what Putin would like to see does seem to be, as you say, a key source of tension they'll need to overcome. We'll see what happens tomorrow, of course. Bloomberg's Oliver Crook with the latest on that front. Thank you. We're going to discuss more in terms of the prospects of a truce between Russia and Ukraine and what this could mean for both countries' economies, but also how investors are already starting to try to line up for this potential event. That is next. This is Bloomberg.
March 26th, UK Chancellor Rachel Reeves delivers the government's spring statement. How will she fix the hole in the UK's finances after her fiscal headroom was all but wiped out? And will she be able to keep her own fiscal rules? Live from Westminster, Bloomberg Television has special coverage, starting with the Chancellor's statement to Parliament at 12:30 p.m. UK time. Bloomberg. Context changes everything.
Welcome back to Bloomberg Daybreak Europe. Now, President Trump says there is, quote, a very good chance of a positive outcome in talks with Russian President Vladimir Putin tomorrow. Hopes of a pause in the Ukraine war and a potential thaw in relations between the US or with the US have prompted discussion on Russia's return as an international investment destination. We're joined now by Elina Ribakova, Director of the International Affairs Programme at the Kyiv School of Economics. She's also a non-resident senior fellow at the Peterson Institute for International Economics. Elina, thank you so much for joining us. Let's start with this question, the latest then, in terms of these planned talks between the two presidents of the US and Russia tomorrow. There seems to be a key source of tension, a number, but one of the key standouts seems to be the time frame around this. President Trump wanting a quick and rapid ceasefire. President Putin, according to the reporting, wanting a longer, drawn-out scenario. How do you think the two leaders resolve this tension?
Well, I think Putin needs to signal that he cannot be the one who doesn't want peace, right? You know, the ball was in his court. Ukrainians said that, look, we're ready for unconditional ceasefire. Trump is very much wants to do the deal, as you said. Putin cannot be perceived as the one who is resisting peace or the ceasefire. The problem is that he has maximalistic demands. He would like to have a lot of territories. He would like to have full neutrality, demilitarization of Ukraine, and no peacekeeping force that he doesn't like, right? That is very tricky. So it's highly conditional, unconditional ceasefire. We might still have an announcement of some sort of ceasefire, but it's not clear. It's only as good as it will be held up, you know? If there's nobody to monitor it, or if it breaks down just in a few days or a few weeks, well, that's not a very good ceasefire.
So to be clear, you do think there is a prospect of a ceasefire, it's just whether or not it holds up?
I think there is a prospect of a ceasefire on paper, for sure.
What does that mean for Russia's economy? Does that quickly lead, do you think, to a Trump administration softening its sanctions regime, particularly against the financial sector of Russia?
Well, the most important part of the U.S. financial sector sanctions are secondary sanctions or the threat of secondary sanctions. So implementation, enforcement of that is critical. So the U.S. administration doesn't even have to lift many sanctions. It just can signal that we're not going to enforce them as strongly, and that will give that a chance. So this is on the so-called supply side. But on the demand side, if you look at the Russian economy, it's mostly militarized economy. There's very little to invest in. You're not expecting high oil prices. So it's oil play with very highly risky aspect to it. So you might just go and trade oil, right? At the same time, you could try to access some of the Russian markets, be it ruble or, you know, maybe NDFs, maybe equities. But the problem here is not just access and sanctions. There is also what is your ability to exit. There are very few banks that will offer you a product. There will most likely be only hedge funds who will jump on it because institutional investors are still explaining how they lost pensioners' money investing in Russia's war machine. So it will be a very tricky market to trade and definitely a tricky market to exit.
What are we seeing in terms of positioning? What are you seeing in terms of the data, in terms of hedge funds and financial institutions, banks, and how they are positioning to get access and exposure to Russian assets? Have you seen a tick up on that front?
There have been questions. You know, there are some banks, Western banks, who've never left Russia. And of course, they would like to find a way to restart the market and benefit from volatility. But the questions are mostly coming from hedge funds registered in Dubai. You know, this is maybe not your top client that you want to work with. For the top clients, some hedge funds actually never came back to the Russian market even after 2014 sanctions. So it will be even a higher bar now to come back after 2022. It's highly unpredictable environment. The market is extremely thin, and you might be in a situation where you get maybe some more specialized deal on a proxy instrument because still we have the sanctions, right? And this is the question. If you get in, if something goes wrong, do you have the liquidity to get out?
And you touched on the nature of this Russian economy and how it's been transformed. What is your outlook for the Russian economy towards the end of this year, and how much of an incentive is a relaxation of sanctions to President Putin, given the challenges of that economy?
Well, it's almost like pricking a bubble, you know. Nobody wants to do that. This is a war economy-related bubble, which affects directly certain sectors and indirectly, as well as in a way budget revenues and expenditure. So it will be almost impossible for Russia to pivot towards something else. We've discussed for decades Russia's diversification away from oil and commodities, and yet it still exports 85% as natural resources, 60% of total exports is energy, and the rest is the remainder of the natural resources. And on top of that, it's making tanks and missiles, right? So it's almost impossible for Russian economy to pivot towards something else. And again, that's what makes it so difficult for foreign investors to enter, because it's unlikely that anybody will be let into the Russian defense industry.
OK, so maybe some of those foreign investors getting over their skis in terms of looking to get exposure to those Russian assets. But we'll see how things transform and, of course, transpire in the days ahead. Elina Ribakova, excellent analysis. Thank you for joining us from the Kyiv School of Economics and Peterson Institute for International Economics as we look ahead to that phone call between President Trump and Vladimir Putin tomorrow. Coming up, the global wind industry had another record year in 2024. So moving from the carbon industry in terms of oil and gas of Russia to the wind energy with that European focus, we're going to look at the driving forces between and behind the uptick and what this could mean for Europe's energy security. It all ties together. That is coming up next. This is Bloomberg. Good morning. Now, the wind energy business had another record year in 2024. Bloomberg NEF has an annual ranking of turbine makers out this morning. And here to talk about it is BNEF's wind analyst, Christian Dinker, the lead author on the report published this morning. What were the top wind turbine manufacturers then last year? Where do things stand in terms of the rankings, Christian?
Sure. So Chinese turbine makers led global wind turbine installations in 2024. Just to name a few, we had Goldwind, top of the ranking. The manufacturer remained the largest global wind turbine supplier in 2024. We had Envision, another Chinese turbine player, coming second. But in fact, 6 out of 10 of the top 10 global wind turbine suppliers were from China. But this is not new to us. What's really striking is that they've pushed out US and European manufacturers out of the top 3 for the first time since 2013.
What is behind that success, then, of those Chinese manufacturers?
So that's where things get really interesting. These Chinese players are heavily reliant on their home market, China. That's where they deploy most of their capacity. So if we look at the regional level breakdown, we can see how mainland China installed a record 86 gigawatts last year. Just to give you some sense, China's wind market is double the size of all other markets combined. So That's an absolutely huge number.
What does this mean for Europe? What's the picture looking like in Europe then?
In Europe, additions have actually dropped down. However, the wind sector is growing. To give you some context, last year we had around 36 gigawatts of onshore and offshore wind awarded by these European countries. That's more than double the capacity that was installed the year before. And this is really great for European manufacturers like Vestas, Nordex, or Siemens Gamesa that grabbed 80% of the market in Europe last year.
OK, so some green shoots there, some optimism around the wind turbine space and the install story as well. Christian, thank you for the analysis. Really appreciate it. But China as well, leading and taking a leading role. BNEF's wind analyst, Christian Dinker. There's plenty more coming up. We'll focus again on geopolitics in the Middle East. This is Bloomberg. Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. With the world's central banks in focus this week, Asian stocks gain on positive data from China's consumers. But in the US, futures slide as the Treasury Secretary says the stock market correction is healthy. The US president confirms he will speak with Russia's Vladimir Putin tomorrow, with the talks on ending the war focusing on how to split disputed territory. Plus, the US promises unrelenting strikes on the Houthis in Yemen. The group says it will continue attacks in the Red Sea until aid is allowed into Gaza. Checking your markets right now, and the futures picture has turned lower. Markets digesting, of course, Trump's comments around tariffs on April the 2nd, both sectoral and reciprocal tariffs, speaking on Air Force One. This following those comments, of course, from the Treasury Secretary Scott Bessent, saying that the correction in US markets is healthy. US stocks ended on the front foot on Friday, but still 4 straight weeks of losses. You saw gains in European stocks as well, but 2 straight weeks of losses in the European space, despite, of course, that agreement between the CDU, CSU and the Green Party of Germany to push through additional spending on defence and infrastructure. European futures now pointing slightly lower, just by 1 point. FTSE 100 futures still in positive territory, up 0.1%. S&P futures stateside after the gains of a little over 2% on Friday, pointing to losses of 0.6. Nasdaq 100 futures pointing lower by 138 points. Let's flip the board and have a look cross-asset. Money moving into treasuries. Yields down about 1 basis point on the benchmark as we lead up, of course, to that decision and meeting of the Federal Reserve. It's the comments, of course, from Jay Powell in the press conference that will be scrutinised. The Fed expected to hold in terms of its rate. 4.29 right now on the benchmark US 10-year. Euro dollar at 1.08. Brent at $70 a barrel, up 0.6%, with Goldman Sachs cutting their forecast for Brent to 71 by the end of this year on oversupply concerns, and gold having broken through $3,000. That level, of course, on Friday, looking to hold above those or closing in again on those record highs, just up just shy of 0.2%, just below 3,000 so far in the session. Now to geopolitics and the Middle East. Iran-backed Houthi rebels have claimed responsibility for a second attack on US warships in the Red Sea. The group says this is in response to US airstrikes in Yemen and have vowed to continue to retaliate until the Gaza blockade is lifted. It comes as Pentagon Chief Pete Hegseth says the US's large-scale strike campaign against Houthi targets will be, quote, unrelenting.
This campaign is about freedom of navigation and restoring deterrence. The minute the Houthis say, we'll stop shooting at your ships, we'll stop shooting at your drones, this campaign will end. But until then, it will be unrelenting.
Unrelenting. For more, let's bring in Bloomberg Horizons Middle East and Africa anchor Jumana Pasecci. Jumana, what do we know at this point about the strikes and the Houthis' response?
Well, a marked escalation for sure over the weekend with the President Donald Trump threatening to open the gates of hell on the Houthis. He said that they launched a decisive and powerful, this is a quote, wave of attacks on the rebels on Saturday evening. And the Houthi themselves are saying that a series of airstrikes hit the capital, Sana'a, and one of the cities close to the border with Saudi Arabia, killing at least 50 people and injuring more than 100. The U.S. saying that they targeted multiple Houthi leaders and took them out. But the Houthis have been doubling down since the attack on Saturday and said that they're not going to cease attacking any ships that are linked to Israel and even U.S. as well. They've claimed in the last 24 hours to have hit a U.S. aircraft carrier group, the USS Harry Truman, and that they would continue to target American commercial vessels. And of course, this is a marked escalation because since January 19, i.e. the beginning of the Phase 1 ceasefire in Gaza, there have been no attacks on the Red Sea. So this marks a considerable re-escalation of the conflict that started brewing last year.
Yeah, OK, a re-escalation when it comes to the attacks between the US and those Houthi rebels in Yemen. We continue to watch that story. Meanwhile, in other parts of the region, an attack this time by Syria on Lebanon. What are the details there? How significant is that, Jumana?
Yeah, I would just say on the U.S. Houthi story as well, the U.S. I think quite clearly want to send a message to Iran. The reason why they're using such strong language and why they did go ahead with the airstrikes on the capital, Sana'a, on Saturday is to send a message not just to the Houthis, but to Iran as well. With all of these other geopolitical stories at play, don't forget that the U.S. also wants to bring Iran to the negotiating table around the nuclear program. But of course, that ties into other proxies around the region, which brings us to what happened in Lebanon and Syria over the weekend. Unusual, I've got to say, unusual escalation, because this time it was the new Syrian military who launched a wave of shell and rocket attacks at one of the border cities between the Syria and Lebanon border. And what they claim is in response to Hezbollah ambushing Homs over the weekend, kidnapping 3 Syrian army personnel and later on killing them. Now, Hezbollah deny any responsibility or any involvement in the ambush of those 3 army personnel in question, but it does actually bring to the forefront once again, the conflict in the region and the fact that, don't forget, the Hezbollah military group was closely aligned to the ousted Assad regime. Now that there is a new government in town, and we're beginning to see an emergence of tensions between this Hezbollah military group and this new Syrian government. And it is a time when, of course, the Lebanese president, the new president, has been trying to bring down the temperature in Lebanon vis-a-vis its neighbors. This doesn't serve them well from that perspective. But at the same time, cooler heads are looking to prevail, with many in Lebanese media looking to downplay that attack. And of course, it is important to note that there were actually no casualties on the back of that incident. So perhaps it was just the Syrian government sending a warning message to Hezbollah as well.
OK, we continue to monitor events then on the border between Syria and Lebanon in the broader context. Bloomberg Horizons Middle East and Africa anchor Jumana Pasechi, thank you. Now to the central banks. It's a big week, of course, with decisions from the BOJ, the BOE and the Federal Reserve. The ECB, of course, not until April the 17th after they cut rates again. But we've been hearing from a key voice because the governor of the Bank of Spain has told Bloomberg it is now impossible to predict where Europe's interest rates will go. Speaking exclusively with Bloomberg's Kriti Gupta, Jose Luis Escriva discusses the impact of US tariffs on the rest of the world.
There will be primarily inflationary in the United States. In the rest of the world, including Europe, will depend very much on second-round effects and retaliation policies, which are still very difficult to anticipate. I would say that, if anything, what is coming from these trade policies from the United States is uncertainty, extreme uncertainty in terms of the impact on the various economies. In principle, they are inflationary, but at the same time, they might impact negatively on demand, and confidence, and in this respect, the net effects in terms of a positive supply shock on inflation and a negative shock on activity, and in turn on inflation, exerting downward pressure is very difficult to go ex ante. So I would say, if anything, the situation has given rise to a very complex and unpredictable environment.
It's quite clear that the ECB is still very much on a cutting path with the uncertainty to provide that sort of safety and even just to come out of that restrictive territory. Does that create space for some sort of policy misstep? And I ask this in the context of this time we saw this in the first Trump administration when the trade wars first came about. You saw global central banks obviously the Federal Reserve, but right here in Europe as well, talking about insurance rate cuts. Is that the way to be thinking about the ECB's approach to specifically in response to the trade war out of the U.S.?
We are now far less restrictive than we were a few months ago, because we have already undertaken a significant correction from previous increase in interest rates. So now we are in a situation which is much closer to normal circumstances, and this has to be acknowledged. And from that, I mean, it's, as I said, at this stage, I would say we have to wait to see exactly all these policies or potential policies and second-round effects, how they really materialize, in which direction. It's very difficult.
Bank of Spain Governor Jose Luis Escriva speaking exclusively with Bloomberg's Kriti Gupta. Kriti joins me around the set right now. Kriti, thanks for the details and bringing this exclusive to us. I mean, what really stood out to me was that lack of clarity, the uncertainty from a central bank typically more on the dovish side of the spectrum, and yet no conviction either way, it seems. What did you draw from this conversation?
Well, it was fascinating because on the one hand, they're dealing with, of course, these massive growth impact from the tariffs instigated by Donald Trump. On the other hand, this fiscal spend. And I kept asking the governor there, who, of course, is a voting member of the ECB, do they counteract? Is the fiscal spend coming out of Germany and the rest of Europe enough to kind of put a pin in some of the growth impact from Donald Trump? And he says, look, it can go in either direction. He's not even taking perhaps a cut off the table or even a pause off the table. He is talking about where the data perhaps lies. And this is very classic central bank governor speak, in that he's going to say it's data dependent. But at the end of the day, he really put an emphasis on services inflation. He said the big red flag here is that services story. What I asked him, though, is that does that uncertainty, especially if the ECB, as largely considered by the markets, is headed towards neutral nonstop, does that create room for a policy misstep? Take a listen to what he had to say in response.
Sometimes the central scenario is less likely to materialize, or the likelihood to be attached to it is sometimes larger, sometimes is not as large as we would like, because the uncertainty and the risk to the central scenario is very significant. I would say this is precisely the current situation in which the risks to the central scenario on both directions are larger than normally.
The risks are larger than normal. You heard it there from the central bank governor there. It's crucial, though, that he's talking about this idea that could go in either direction, but still the progress being made away from restrictive territory is still where the key lies. And he's pretty steadfast on the idea that that progress has been key in giving European banks and European kind of companies the boost that they need.
OK, Kriti Gupta, anchor of the opening trade, with that important interview, of course, and the perspective from the Bank of Spain governor and a member, of course, of the ECB's Governing Council as well. Kriti, thank you. So from what's happening in Europe to a view and a perspective on Japan, with Berkshire Hathaway raising its stakes in Japanese trading houses. We know Warren Buffett has been bullish for some time now on these Japanese corporates, and we are talking about holdings in 5 Japanese trading houses. This is according to filings from Japan's finance ministry, and you can see the gains coming through on the back of that news. We'll get more details and bring it to you, of course. But Berkshire Hathaway and, of course, Warren Buffett then doubling down on the stakes that they have in those Japanese trading companies. You can see the gains coming through so far in the session. Coming up, we're going to speak to the Swedish AI startup with its eye on a US IPO. That is coming up after the break. A focus on agentic AI and the adoption by enterprise. Stay with us. This is Bloomberg. Now, it's reported that Oracle is accelerating talks with the White House on a deal to run TikTok. According to Politico, the U.S. administration still has significant concerns about what role the app's Chinese founders will play in its ongoing American operation. Vice President J.D. Vance says he expects President Trump to wrap up a deal for the popular video-sharing app ahead of next month's deadline. And Chinese search giant Baidu has released a new AI model that can articulate its reasoning. The firm is looking to regain momentum against up-and-coming rivals such as DeepSeek and established competitors like Alibaba. The Ernie X1 model works in a similar way to DeepSeek's R1. Baidu was the first Chinese firm to launch a chatbot modelled after OpenAI's ChatGPT, but rival chatbots soon took over in popularity. And staying on this topic, artificial intelligence startup Sana Labs is eyeing a potential US listing in the coming years. It's joining a growing trend of Swedish technology firms attracted to North America, thinking of Klarna, of course, planning their listing sometime this year. According to reports, Sana has developed so-called AI agents that can quickly perform complex tasks on a company's behalf. It's raised more than $130 million to date. That includes $55 million in a recent funding round, putting the company's valuation at $500 million. US dollars. Very pleased to say I'm joined now by the founder and CEO of Sana Labs, Joel Hellermark. Joel, thanks for joining us in the studio. What exactly do you guys do? It's all about agentic AI with the focus on the enterprise. How much adoption are we seeing for your models? How much appetite, how much growth potentially is there in this segment of the business?
For sure. So today we partner with over 300 of the world's largest enterprises. Over the last couple of years, we've served over 1 million users. And really how we see it is that there are sort of 3 arcs of enterprise AI. The first was enterprise search, just getting all information easily accessible. The second was assistance, and that's what we've saw a lot sort of post-ChatGPT. And then the third arc is agents that are able to act, reason. And what we've seen is, as you move throughout this, you sort of saw 10% productivity gains from enterprise search, 30% productivity gains from assistance. And really with agents, what we've seen in these initial applications is 90% productivity gains. So we're extremely excited about the prospect of deploying agents for enterprises globally.
Are you seeing the return on investment? Talk to us about the client mix that you have and how much appetite there is to adopt and how they are adopting and whether or not they're seeing that ROI right now.
For sure. So we're focused on knowledge workers. So knowledge-intensive industries, everything from pharma to finance to legal, where you get a high ROI of making not only knowledge more accessible, but also augmenting knowledge workers to do that more effectively. The grand challenge has been, how do you connect these LLMs to your company knowledge? So if you just deploy a generic LLM, you will see very little value because it doesn't know anything about your company. So what Sana does is that it integrates this into all of your company's applications so it can reason on the company's behalf.
Is that you throwing a bit of shade on OpenAI there?
Not really.
Are they your who are your key competitors?
So we partner with all of the LLMs. We say we're LLM agnostic. Yeah. Over the next couple of years, these companies will be deploying over 500 billion into the foundational model research, where we think the grand challenge is on the UI layer, creating beautiful interactive experiences that enable knowledge workers to use these services. This is also an area Sweden has always been particularly strong in. So what we're focusing on is building the user experiences and integrating that with your company data.
What are the biggest challenges right now in terms of adoption?
I think one of the grand challenges is the quality of the data you integrate it with. So you think you could just integrate this with all of your company's knowledge and you're done. But you need a lot of sophisticated workflows around that to make sure your data is verified, that it's up to date, that you're connecting the right sources and so on. The second challenge is what's going to be the UI for superintelligence effectively. And we think that it needs to move towards more proactive user experiences. Most knowledge workers don't really know what to put in this white box. And so what we're focusing on is how can you create a proactive user experience that nudges the users in terms of how it could support them.
Amid this rush to deploy agentic AI, is there a risk that your segment of the market starts to downplay the data and privacy concerns tied into this? I mean, where are you hosting the data? How do you ensure that privacy and data concerns are addressed?
So Sana is an enterprise-first company, meaning that we've built this from the get-go for some of the world's largest enterprises. One of our first customers was one of the world's largest pharma companies. So we've had to deal with the strictest data privacy concerns from the very beginning. And I think that's also what's giving us a lot of edge, because a lot of the competition might not be able to follow as strictly those rules as we can.
OK, and you've told our colleague that you plan to IPO in the US at some point in the next few years. Why the conviction around the what would Europe have to do? What would Stockholm or the rest of Europe have to do, or here in the UK have to do to convince you that maybe there is a case to be had for listing in Europe or the UK?
I think we're really excited about building a long-term sort of generational European company. We've seen a lot of companies hit the sort of 100 billion mark now early on. We hope to be the first European trillion-dollar company. So it needs to be a very meaningful appetite to invest in these types of technologies in Europe. Yeah. And where we've seen historically, US has been a better place for those types of companies.
Have you been turning down acquisition attempts?
I can't comment on that.
Okay. You want to be a trillion-dollar company in Europe. What does the business look like in 10 years' time, then?
I think it's ubiquitous, serving over we have 1 billion knowledge workers in the world. We want to be ubiquitous for all of them. What our hope really is that with our technology, we can unleash sort of a generation of Da Vinci's. Everyone will have access to a polymath in their pocket that can code, reason, act, and augment them to solve the world's most pressing problems. So if we put a Da Vinci in sort of everyone's pockets, we hope that could unleash a new category of companies in Europe too. Okay,
a Da Vinci in everyone's pocket. Jill, thank you very much indeed. Jill Hellermark, the founder and CEO of Sana Labs, valued at about $500 million with clients including Klarna, Novartis and Merck, amongst many others, of course. There's plenty more coming up. Stay with us. This is Bloomberg.
In other words, whatever they're charging, we're charging. Very simple. If they're charging us, we're charging them. It's no longer they charge us and we don't charge them.
US President Donald Trump, of course, speaking about plans for reciprocal and sectoral tariffs kicking in on April the 2nd. He's not so far budging from that, reiterating that. And here's what happens in terms of the tariff impact and expectations then from US consumers on the inflation picture 5 to 10 years out. We saw a sharp spike in the University of Michigan survey that came out on Friday in terms of those 5 to 10 year views on inflation, up to 3.9%. You have to go all the way back to 1993 to see a level similar to that. And that is a potential concern, of course, for the Federal Reserve. That decision on Wednesday, fully expected to hold, but the conversation, the press conference from Fed Chair Jay Powell, of course, consequential on whether or not he'll give more clarity on where the emphasis lies now between jobs and inflation. And this, an important piece of that backdrop. Let's flip the board and have a look at what's happening with the Mag 7, because the earnings profile, the valuation squeeze that's come through on Mag 7, of course, in contractionary territory, correction territory for Mag 7, you are still at a forward-looking in terms of the profits, forward guidance around 12 months, expected 26 times forward, 12-month forward earnings. That is still a level well above where you were at in 2022 when it was at 19 times. Higher as well than the level you saw prior to that and previous drawdowns. So there's a view that there could be further to go in terms of the squeeze on those Mag 7 companies. But we know as well from 2022 that proved to be a very good buying opportunity. But again, you're at 19 times versus about 26 times now. Let's flip the board and have a quick look at what's happening in terms of Chinese tech, because that is a very different story. You've got earnings from the likes of Meituan and Tencent later this week, which could either reinforce that view or challenge it. But here's the crocodile mouth shape that you're getting now in terms of the drawdown and the pressure on US tech Mag 7 versus the gains that have come through for Chinese stocks with that tech focus. The AI theme has been there for China. Will it be validated this week with the earnings story? Now, at 7:30 a.m. London time, we're going to be speaking to the UN's Emergency Relief Coordinator, Tom Fletcher, about the void left by US aid. But the opening trade is up next. Stay with us. This is Bloomberg.